with Liberty Home Mortgage. Thanks for coming.
Good to see you again, Betty. Thank you so
too.
much for having me.
Well, there's a few questions I'm going to ask today about buyers and their process and some of the questions that they ask often. And one of the things that they do is they're questioning between what kind of loans that they should use and whether it should be conventional or FHA and the difference between the loans.
The great thing about today is that there's only a couple of loans somebody could qualify for, actually. 10 years ago it was very confusing because there was so many loans. When the market consolidated, there's only a couple. There's VA loans, which are for veterans. There's USDA loans, which are more towards rural areas, areas such as that. Then there's FHA loans, which are very, very geared to people with little money to work with, little down payments, maybe a couple blemishes on the credit. Then there's conventional financing, which is more traditional, more built for bigger down payments, higher credit scores, more established individuals. So those are the different types of loans. There's not a lot, so it leaves it very clear as far as what's available out there.
Okay, so all depending on where they're purchasing, the money they have for a down payment and different
Absolutely. It's easy to figure out pretty quick, so it relieves a lot of time delays that used to exist 10 years ago.
Right, so we obviously don't make the decisions and we have them speak to the specialists.
Hopefully, yes.
Good,
Yes.
good. And then what do they need to meet the qualifications? What do they need to bring?
Ultimately, to qualify for a mortgage loan, no matter where you go, it takes three things. It takes credit, it takes income, and it takes a little bit of money. Credit determines whether or not you can even qualify for a loan. Income determines how big of a loan you qualify for, and money is simply to cover either incidentals such as inspections and appraisals or the down payment.
Okay.
So those are the three big factors that people have to pay attention to. They have to pay attention to their credit, their income, and the money they have to work with.
Okay, that makes sense. And then you mentioned inspections and things, and the buyer, they usually pay for the home inspection, and then what are your suggestions?
The buyer has to, there's definitely a few things when you're talking about purchasing a home. I mean, it's the largest investment of somebody's life. It's a gigantic structure with a lot of moving parts within it.
Right.
So home inspections are essential. Even though no mortgage loan today requires a home inspection, we highly recommend them. I think every lender pretty much does. It's an extra set of eyes, even above and beyond the real estate agent or the borrower themselves. Even if it's something the borrower specializes in, maybe they're in construction and they know housing, it's still good to get an inspection. So it's fees like that, I call those somewhat incidentals.
Right.
They're
Okay.
going to pay that, and that's part of the exposure or risk that the buyer takes, is you're gonna pay money for that, a few $100s, that you're risking. If the inspection goes bad, you lose the money. But ultimately, between losing $300 and $100,000 on a
Right.
home, it's worth getting an inspection. It's definitely a good thing to get.
And we always suggest here at the Dream Team and our buyer specialists, we definitely suggest for every buyer to get a home inspection. And like you said, even
Absolutely.
if they're handy with things and think things aren't a big fix down the road, it could be a very large
Absolutely.
fix that they're
Absolutely.
better off to
Home
get
inspector's
that
a great,
suggestion
great
up front.
individual to have with you.
Okay, well that's good, and we know too that the home inspector will offer some suggestions, maybe it's not a big fix, but just a homeowner's suggestions to go
Pretty
through.
detailed
That's
report.
nice
It's a
too.
detailed report, which is good.
Right, and then also with the repairs, I know some repairs can be very expensive, and a homeowner or a buyer may decide, should I do this or shouldn't I do this because the expense is so big. A seller may not want to pay for it. So with that, with the repairs, what?
Well, as far as mortgage loans go, when it comes to a home which has repairs, in which either the appraiser says it needs repairs or some cities inspectors will come out and possibly say that,
Right.
there are loans called renovation loans.
Okay.
On a renovation loan, we will not only give the amount of money needed to purchase the home, we will also give the amount of money needed to make the renovations. Those renovations can be a new roof, a new siding, new windows, new doors. Borrowers can even get appliances if they want appliances.
Oh, that's great.
All of that money is put together into one single loan, and those types of loans are called renovation loans. Another type of loan you can get.
And is there a special inspection then that the lender does to figure that
There's
out?
no
or-
special inspection. My
Okay.
industry has done a great job, I think, of making people think there are. And there's
Okay.
no additional inspections, there's no special inspections, nothing like that at all. It's just
Great.
how much you're buying the house for, what type of repairs do you need, and what are the costs. So,
And do they have to have special contractors when they do that?
absolutely not. You do not
Okay.
need special contractors. We do prefer that borrowers use one contractor. You want to kind of limit it.
All right.
Naturally, going to too many different people to do something can cause delays, so you try to keep those delays
It
to a
might be
minimum.
more as a hassle to try
Absolutely.
to work with a lot of different
Absolutely.
contractors.
Yes.
Okay, good. And there's a lot of contractors out there that will do everything.
There's great contractors and great companies out there, and you can research them at the Better Business Bureau. Home Depot, Lowe's, places like that has really good subs.
Okay.
Or the real estate agents you work with are know.
Right, right. We do have a lot of our providers that we have to give, so that's good. And then I think with the appraisals, they always wonder too, how does it work with paying for the appraisal? What is the extra fees they're gonna do and what's the cost of that? Because they're worried if things are gonna just pile up, and is this money that they need up front?
Absolutely. When it comes to the big upfront fees that a borrower is going to pay, of course, is the home inspection. So the home inspector tells you about the guts of the home. That's a very detailed inspection. The
Right.
appraisal is required by the lender, and that tells the lender basically that the sales in the area support the purchase price of the home. So for the appraisal, the appraiser actually goes out to the home without anybody there, without the real estate agent there, without the buyer there, and they determine the value of the home. That's a fee that the buyer does have to pay for. It's non-refundable,
Okay.
but it's absolutely required for the type of.
And that's usually done pretty quickly up front.
It's done within the first half of the transaction.
Okay, yeah,
The
that's-
front end of the transaction is the inspection and the appraisal. The back end of the transaction is the underwriting process and the closing of the loan.
Well, that's great. And then pretty much that's their fees, and then they have their closing costs that they're always asking for, and they're asking us,
Absolutely.
and we're not sure what to tell them. So we always like to put them back to the lender.
That's why having a really good real estate agent team such as yourself and the Dream Team is so important, because you really want to have an agent who can negotiate those costs out with the seller, depending on where the purchase price is and how strong your borrower is. Very, very important part of every transaction.
Good, and I think we've gone over pretty much all the fees that they would be.
I think we
Paying for-
generally did, yeah.
Good.
Without itemizing, there's definitely, the fees are out there, it's good.
Awesome. Well, it's always great to have you.
Thanks again,
to see you
Betty, I
again.
appreciate it.